India's largest private sector lender is facing a rare governance storm. Not because of a fraud finding, not because of a regulatory crackdown, but because its own chairman walked away. Hi, I'm Saurav Kumar and I'm going to break down all the information that we have to understand what it means for the bank's health and investors' confidence. So stay with me till the end of the video. Atanu Chakraborty, part-time chairman and independent director of HDFC Bank, resigned on 18th March 2026. His resignation letter dated 17th March was received by the bank at 3:17 p.m. on 18th March. He wrote that certain happenings and practices within the bank observed over the last 2 years were not in congruence with his personal values and ethics. He added that there were no other material reasons for his resignation. He did not name specific practices, neither did he name any individual. That ambiguity is now at the center of the story. So let's try and understand what happened and what we know so far. HDFC Bank moved fast and took some quick decisions. First, on the same night, the bank disclosed the resignation to the stock exchanges. Next, it appointed KK Mistry, an interim part-time chairman, for 3 months, with RBI's approval. Mistry is a veteran banker and former vice chairman and CEO of HDFC Limited. CEO Shashidhar Jagdishan has said the board was baffled by the resignation. He confirmed that every board member, including the whole-time and independent directors, personally tried to persuade Chakraborty. They wanted him to reconsider his decision or at least elaborate on his concerns. And in case both were not acceptable, then try to moderate the language of his letter. In their Sebi filing, the bank has stated that Chakraborty did not mention any specific incidents or practices that were not in accordance with his personal values and ethics. Interim Chairman Mistry echoed this on an investor call, saying there was no material matters and no specific operational or other issues that had been highlighted. Non-executive director Renu Sood Karnad was even more direct, saying that every time the board asked him to elaborate, his response was nothing, which was baffling. So on 23rd March, the bank board approved the appointment of domestic and international law firms to conduct an independent review of the resignation and related issues. This marks a significant and non-routine step initiated to address the concerns. Now here is a critical piece of context that the market is watching closely. 2 days after Chakraborty's resignation, HDFC Bank terminated 3 senior employees following an internal investigation into the alleged mis-selling of Credit Suisse additional Tier 1 bond to NRI clients through the bank's Dubai's International Financial Center branch. The Dubai Financial Services Authority had earlier barred HDFC Bank from onboarding new clients at its Dubai branch in September 2025, while its investigation was ongoing. According to Bloomberg, the rift between Chakraborty and management stemmed from differing views on accountability, particularly regarding client losses tied to risky bonds sold by Credit Suisse and recent restriction imposed on HDFC Bank in Dubai. Chakraborty pushed for broader accountability, arguing that more senior officials should be held responsible. The senior management did not agree, creating an impasse. CEO Jagdishan has said the two events, his resignation and the staff terminations, are coincidental and not connected. But the timeline is striking. A chairman resigns, citing ethical concerns, and 2 days later, 3 senior executives are fired over a probe that had been running for over a year. The Reserve Bank of India moved quickly. On 19th March 2026, the RBI issued a formal statement, unusual in itself. It described HDFC Bank as a domestic, systematically important bank with sound financials, a professionally run board, and a competent management team. The RBI has stated, based on its periodic assessment, there are no material concerns on record regarding its conduct or governance. In simple terms, the regulator sees no immediate systematic risk. But it also said it will continue to engage with the board and management on the way forward. That is not a blank check, it is a watching brief. Here the tone is important. Sebi chairman Tuhin Kant Pandey did not direct his public remark at HDFC Bank. He directed them to the responsibilities of independent directors. Speaking after a board meeting on 23rd March, Pandey said, "Independent directors are expected to act responsibly and not make any insinuations." He emphasized, no one is expected to make insinuations without proper evidence and recordings. In other words, Sebi's initial public posture was a caution aimed more at Chakraborty's vague language than at HDFC Bank's operation. Because this is HDFC Bank, India's largest private sector lender, a domestic systematically important bank, a bank long seen as the gold standard of banking in India. And because the resignation didn't happen in isolation, it came alongside an 81 bond mis-selling probe, executive termination, restrictions by the Dubai financial regulator, and as Bloomberg reported, a deeper disagreement over accountability and oversight. CEO Shashidhar Jagdishan's current term as MD and CEO ends in October 2026. The bank's nomination and remuneration committee is expected to consider his reappointment in the near future. But here is the complication. Chakraborty had reportedly opposed the extension of Jagdishan's term before he resigned. The board has firmly denied any connection between the resignation and the CEO's reappointment. Interim Chairman Mistry said the two are completely different matters. So what should investors and market observers watch now? 4 things. 1. What exactly emerges from the independent legal review commissioned by the board. 2. Whether Chakraborty provides more specific details to the board, regulator or to the public. 3. How the CEO reappointment process proceeds and whether a new permanent chairman is in place before that decision is finalized. And 4th, whether any further facts surface from the 81 mis-selling probe, the DFSA restrictions or related regulatory channels. For now, here are the facts. There is no confirmed wrongdoing. There is no regulatory red flag on the stability. RBI has vouched for the bank's soundness, but there are questions that neither the board nor the departing chairman has fully answered. And in banking, trust is what ultimately matters. It is built on how institutions handle questions they cannot yet fully answer. This is Saurabh Kumar. Thanks for watching.